And all the way from a tropical island, we have Nathan Kay.
Hey guys, my name is Nathan. I'm a senior partner at Applicature, and as well, I'm the CEO of Mempool Ventures. At Applicature, we are business-to-business blockchain solutions provider for exquisite projects. I started my journey with Applicature back at the end of 2017/2018. We went through tremendous crypto winter. Before that, we went through amazing times of ICO boom, and then the DeFi summer. Throughout our experience and history, we helped more than 100 companies to grow their business in the blockchain space. I've personally joined blockchain and the movement back in 2015, building mining machines and exploring the space in very traditional mode. But last year, we've started our venture arm, Mempool Ventures, from where we invest into early stage companies around blockchain niche. We provide a very concierge service for young founders who want to build their business, who want to penetrate crypto market. And yeah, happy to be joining this panel today. First time for me on this panel, but I hope I can share some really interesting things with you and give you some hints on how to build and grow your business to make it super successful.
All right, thank you guys. So we're going to start off with getting the panel's insights on just the state of crypto and blockchain right now. We all know how fast growth this industry is. Are we in a bull market right now? And is the bear coming? And I know often we use hello. May I ask whoever? Thank you. Thank you for muting. So the question was just general trends. Where are we right now? Are we in a bull market? Is this are we in the good times right now? And just around the corner next year, maybe we're all going to be less busy. So I'll start with you, John.
Sure. I think one of the interesting part about the Bitcoin blockchain journeys has been the significant ebbs and flows and up and downs that we've all gone through. And I think the current state of blockchain is that it's gone through a pretty significant change from the previous cycle, where adoption has significantly increased. And I think there are people now that are coming into the blockchain, not so much to say, I want to have cryptocurrencies, or I want to participate in this in mining or blockchains, but they really are looking at building some fundamental feature sets and fundamental use cases that actually most people who use them will not know they're being powered by the blockchain. And I think that's where the adoption curve is definitely picking up speed, and I'm very encouraged to see that, because I think right now the way the crypto industry has gone is there are several different silos within the crypto industry that's been doing a lot of work. And unlike previous cycles where there was only about 2 or 3 main areas where crypto was focused on, the diversity in our focus allows us to actually kind of bear out any so-called crypto winters that may be upcoming, right? So I'm fairly encouraged with this current state and where we're headed.
Oh, amazing! Yes. And then let's turn to you, Nathan. You've certainly seen a lot since you were building mining machines. What are you seeing?
Yeah. Together with Applicature, we've been through the previous crypto winter. It was a very interesting time because this is the moment where you see a lot of companies going sidewalks, really. Only those who have a strong support from their investors and from their community survive. And just as John said, it's really true that the amount of the amount of cases and the amount of sub niches, let's call it this way, inside of the blockchain had really grown significantly. It does give a feeling that the upcoming crypto winter, and it will come. Everybody understands this from the crypto society, that the crypto winter will come sooner or later. But we do think that this crypto winter might be slightly less cold than the previous one. Maybe Bitcoin will drop 50%, 60% of its value. But the diversification of technology implications and the amount of really niches that started adopting blockchain, including metaverse, including DeFi, including NFTs. It does have a lot of potential for the niche to sustain and to go through the next cycle in a bit easier mode, I would say. But the bearish markets would come sooner or later. It's obvious. It's just a cycle. We need to go through that, and that's why investors who are being onboarded to those projects that want to sustain their situation inside of that bearish market, they need to be super strategic. And projects who work with raising funds through crowd loan, through an ICO or IDO or IEO, whatever the case is, they should be super strategic in the way they build up their. That's super important. That's for sure. That's what we saw with the project that survived the previous.
Awesome. Okay. May I ask everyone to mute if you're not speaking, please? And next, we're going to go to Max with that question.
I think the guys are looking at the industry more from the B2B perspective, right, on the blockchain side. I mean, what we see right now from our consumer application and consumer adoption, obviously because of some global trends like inflation and monetary stimulus, right? There's a lot of cash out there right now. So the funding usually, as for the business, I mean, raising capital through Applicature right now, or token sale, and it's a pretty smooth ride. I mean, there's a lot of startups out there, but there's a lot of money as well, and people are hunting down the valuable crypto, obviously, businesses. So I think there is an understanding right now from consumer perspective and investor perspective that there's a change of some sort happening right now in the global economy or behavior. I think what we've noticed that change. I was talking to someone from Voyager Crypto, someone senior, and those guys were like a small brokerage until Robinhood couldn't trade Dogecoin and halted the chain of the Dogecoin. They said that was a kind of a pivotal moment for us in our history of the business. So they pretty much exploded. They onboarded like 400,000 people within 10 days. So I think that there's definitely some mistrust in the traditional consumer applications as well, and fintech applications that are kind of selling their order flow or having the spreads in the business and have little transparency. So that's why Web3 has been taken off pretty substantially, and it's really easy to scale on the decentralized matter. I mean, you don't really need to do any KYC. There's really very little friction. It's really global, and it really enables that 3 trillion economy to participate right easily without any registrations in the yielding, right? So in earning some rewards on their deposits. So I think there's definitely a shift right now. If you talk about the DeFi, that's the ecosystem that we know. I mean, and we participate. We're a centralized business. We do KYC. We follow all that boring regulation stuff that will kind of hold you back a little bit in terms of the product development and user adoption, right? But what we noticed, as an example, one of our partners, QCP Capital, out of Singapore. So those guys have been trying to gather their $3 billion book. Took them 5 years to get $3 billion under management in options and derivatives markets. The other guys were 24. They just launched their product in London, out of London, UK. They launched a similar derivatives trading desk, but on the decentralized manner, fully Web3. They gathered 1.7 billion in 2 months. Okay, so the ability to scale the businesses in the decentralized manner, I mean, through loyalty, through incentives, through earning pools, right? It's really high, but obviously, I mean, there's always another side of the coin where there's bad actors, right? Trying to pull out the rug pools, try to pull some scams. So, I mean, that there is a shift in the understanding of the principles of, I mean, a little bit of the money economy, right? I mean, everybody knows like a traditional banking 110, right? I mean, fractional reserve system. No, I mean, a lot of people don't understand that the money supply has grown substantially, and there's a lot of inflation happening. So definitely, the crypto is becoming a hedge, especially with the Bitcoin and the assets that are more stabilized, that has been around for 10 years, right? And proven different cycles of the market. And I don't think anybody knows what's going to happen to the market. I don't think you can say what's going to be in a month, in 2 months, in 3 months, or in 6 months. Right. So it's really kind of it's a risk hedging business. I mean, you have to be very flexible. You have to be cautious. You have to operate on the understanding that it can change drastically and dynamically, because that's where we operate. Crypto is very fluid market.
Wow, interesting. And that sort of segues into the specific trends we're seeing and what you're excited about. Thanks for that overview of DeFi, Max. Let me go to John and talk about some trends and I guess, of course, e-commerce. What are you seeing there?
Yeah, I mean, I think what's been happening in e-commerce generally is effectively NFTs have created a world where digital goods are now synonymous to any other physical good that merchants are selling. And that's part of the reason why we had to take such a fast approach to start enabling the sale of NFTs. But I think the interesting part, it's not so much just the sale of NFTs or the ability to get NFTs in people's wallets, but what can you do with them? Because I mean, the concept of gating content or access to certain things leveraging NFTs has been known for a while, but there hasn't been very many good solutions for that. So I think that the explorations into some of those utilities are going to be how the NFT space evolves and grows. The other aspect of e-commerce, though, is that I've been talking to a lot of counterparties at various blockchain foundations and people who's been developing a lot into the space. And there are a lot of growing pains related to the fact that there's some fundamentals around e-commerce, things like flash sale behavior. How do you auto scale to account for something like a flash sale when you're selling a digital good? And it's a really hard problem to solve. And some of these projects have done an amazing job at setting up the NFTs themselves and setting up the Web3 architecture in order to support it. However, one of the things that they realize is because customer behavior started mirroring a lot of traditional drops and just basic e-commerce behaviors that you see, some of the other areas of their interface and their interactions with their buyer base wasn't scaling appropriately. And so these are like the growing pains that happens in e-commerce. And I think that there's a really interesting opportunity in taking some of the lessons learned from how e-commerce operates and have been growing for the last 20 years and try to apply it to some of the interactions and purchasing patterns that are happening within the crypto space, because there's some fundamental learnings that I think does apply fairly well. So I think it's a very exciting space right now in the e-commerce for Web3 and crypto, and there's actually quite a lot of interest and quite a lot of people getting involved in it. And so yeah, and I think one of the things that has been happening in e-commerce because it's really related to the merchants, because really at the end, the e-commerce is powered by merchants. Merchants are the one that takes all the decisions and that really are the voice of how buyers interact with their products. There has actually been a bit of a movement to try to coordinate across all of the blockchains where NFTs can be minted, to have discussions and to see if we can set cross-chain standards around how to do this more effectively. Because at the end of the day, the merchant and customers have expectations, and it's great to be able to make sure that all those expectations can be met no matter which blockchain you select.
Yeah, Yeah, interesting. And I guess how long have NFTs been sort of, I guess, part of like on your radar at Shopify? Has it been like in the last year or 2 years? Or
So
curious?
our first merchant dropped an NFT in July, and that was the Chicago Bulls of this year.
Right.
It's been on the radar for quite some time.
Yeah.
It just we needed to come up with a way to allow a merchant to sell NFTs in a way that really simplified how a merchant and a buyer could interface with the blockchain. There was a lot of complexities around, creation of a blockchain wallet, purchasing a crypto in order to participate in the NFT markets, and
Yeah.
that was something that we tried to make sure that we could remove the complexities and the frictions that exist. So right now on platform, all of our merchants, when they sell their NFTs, the NFTs themselves can be purchased through any payment facilities, anywhere from credit card to crypto to any of the other ones. But the difference, though, is that the buyer does not need to have a blockchain wallet to purchase it, and they can create their wallet after purchase. And then when they create their wallets, they don't need to purchase cryptocurrency to receive that particular NFT. And I think that loop of allowing people to purchase and own NFTs without going through the whole blockchain onboarding is a much easier onboarding process for a lot of buyers.
For sure. Yeah, interesting. So let's turn to Nathan. You really have a 360-degree global view of trends, whether it's through the companies you're funding through Mempool, or I guess the companies you're working with through Applicature. Give us your view.
So tremendous things are happening in the market regarding NFTs, as John mentioned, really. So when it comes to NFTs, it's also important what would be the use cases to use those NFTs. And in my humble opinion, gaming industry is one of key components for NFTs to succeed, because gamification around NFTs and including NFTs into existing game scenarios and gaming itself for in-game purchases, for in-game items, is definitely one of huge use cases that would be discovered in more details and would have a lot more implications in the upcoming months and years to come. I would definitely also like to highlight layer 0 solutions like Polkadot Kusama. It's a game changer, really. I'm also doing business development for Super Colony, which is venture studio for Polkadot projects. And Polkadot is a bit different beast. This is a thing that introduces sort of sharding process where you have main blockchain with multiple parachains associated with that. Whereas the problem that John really highlighted, which is a real pain for the industry, moving your asset from one blockchain to another without hitting tremendous fees, without hitting complexity of creating wallets here and there, without hitting all those interoperability aspects, is something that is being introduced as a core differentiator for Polkadot and Kusama layer 0 solutions. So I am a great believer in those types of solutions and anything that would be built nearby or on top. DeFi space would definitely be also looking into joining forces with things like layer 0 solutions. And the access to such particular solutions is yet a bit complicated, would say. It's not that easy as to open account at the centralized exchange or even getting your MetaMask wallet, and getting some real profits from that ecosystem is not that easy for a regular trader yet. But in the upcoming weeks and months, I do believe that these sort of beasts would appear in the market more frequently. Polkadot and Kusama are one of the first movers, but there will be more to come. And this is definitely something that we would need to keep on top of our radars. Also, I would like to highlight one thing, that a big player, Meta, previously Facebook, they have their project, which everybody heard of, Libra, right? I think everybody heard about Libra and all the pitfalls that Libra met, but not everyone heard that Libra was rebranded into Diem. And Diem is basically pretty close to be launched. And this is definitely also something that may boost the crypto industry significantly. And I do think that there will be a really big amount of use cases, applications, and things that would be built on top of Diem, just because of the coverage of Facebook and its consortium, like Meta and its consortium of companies, right? So there are so many users there, and Diem would be definitely one of fueling for that ecosystem.
Yeah,
so this is another trend that I would definitely like to highlight. So NFTs and their use cases, like bundling NFTs, gamification for NFTs, NFT portfolios, NFT folios, and stuff like that. Layer 0 and layer 1 solutions, which would be advancing, like own blockchains and things that power up and empower cross-chain functionality, which is still a big pain for the industry. And things that are being launched by really big global players in digital industry, like Facebook and its Diem. These are like key components that I definitely envision being movers for the nearest years to come.
Okay, thank you. All great points. So let's turn to growing a company and some of the best practices and some of the things that, pieces of advice that you guys can pass on. I'm going to first start with Max. And in particular, I'm interested in this idea of pivots too. And so, Max, you've worked with so many different companies, as part of your VC fund, and then ones that you've founded yourself. So, can you give us some of your experience, or what would you pass on to some of the founders today about just best practices and tips about growing your company?
I got it. Listen, I'll just add on the previous conversation about the NFTs, right? So a little bit from our angle, we sponsor like one of the top 5 in the May Fighter right now. And we're looking to sponsor as well an e-gaming team. So a lot of guys, right now we're also talking in European Soccer Club, like a second league. A lot of those people are interested about the NFTs. So it's like, it looks like there's that, nobody understands the economics behind it. Nobody understands what's from the real business, not from our community, right? So the crypto guys, obviously, they do understand the aspects of the tokenomics and the value of digital asset, non-fungible. But those guys from the real world, they know nothing about it, right? So let's say our MMA guy, the big kind of learn point for us right now is to create his own NFT, right? And do an issuance and incentivize his fans. So same we see right now in the e-gaming world as well. And those guys that want to get in. Right now, everybody kind of want to get into the crypto vegan right now. That's what we feel when we talk. We just spoke to Overactive Media last week. It's a Toronto-based holding company that owns a bunch of esports teams. We spoke to DraftKings as well. They just launched their NFT marketplace. A lot of people, we're speaking to a few other bigger players as well. So a lot of people are looking to get into the space right now and experimenting, right? But very few people understand what's the real economical model behind that marketplaces and those non-fungible tokens to their core business, all right? But nobody wants to be left behind. So everybody feel like, okay, there's another big wave that's coming. And crypto has those waves all the time, right? Because there's so much innovation that can be created and value on this blockchain, right, ecosystem, right? So I think the NFTs are a bit of a hype right now, obviously, and definitely have to be very careful. I do it just because I like playing around with it, with MetaMask, and I don't think there's real value and not at least into what I'm exploring there. But there is value for sure, but it's going to stabilize and it's going to be its own ecosystem. Everything's getting kind of segregated in crypto, even in DeFi. And that we participate, we see everything's getting segregated because the market grows, right?
Yeah.
And in terms of the businesses and pivots, I mean, listen, there is no secret sauce. I mean, there is no formula to follow. I mean, everybody just have to. Every business is different. Every business is its own clients, it's its own founders, it's its own culture. So what we try to embed and then early on is and hire people, especially when you're small, is like micro entrepreneurs, on their own, so they can lead a certain direction within the business and take decisions and be accountable. So you can rely on them to explore and learn. That's very important. I mean, so people are curious. I think the curiosity especially in the founder level, but also in the employee level, embeds that culture that people will find the solution. And it's really important in our industry. If we were in the banking and following a certain process from A to Z, that's easy. But I mean, when you have so many variables, so many unknowns, so many changing variables in your journey, in your kind of creating value. What is a business? You create value for shareholders and for your clients, right? Specifically for the clients, first of all. I mean, if there's no problem you solve for the client, there's no value for the shareholders. So I think you have to be product market fit is kind of a dynamic. There's no solution. I got a product market fit because the market is always changing.
Yeah.
So your product is also always evolving, right? So I don't see there is some like big pivots companies are doing. Let's say from one idea completely. So let's say our example. Another one, like we were talking last week to a venture fund called 0.72. That fund is owned by Steve Cohen, the big hedge fund manager out of New York. And they came to us and said, okay, and we're closing the round right now. It's like last week. And they came and said, listen, we guys want to invest, but we think you should pivot. We want to take the full round, 5 million US, but we think you should pivot. Okay. And the pivot should be yield as a service. Because we don't think you can compete as a consumer brand. But you have a good technology. I mean, our framework is based on data, models, and execution. We have like a quant fund infrastructure in DeFi that we built for the last 2 years. So those guys are like, okay, you have a good tech. You guys are techie people. I mean, I don't think you can build a consumer brand, and we want to invest in you. Right now, we'll give you 5 million US full round, and we'll support you going forward if you pivot. But that's kind of a full, complete pivot for us because we're building consumer application. We just launched Android, iOS, and web application recently, right? So, and all the brand and all the omnichannel marketing and everything and people that we hired was towards the consumer application, right? So that's kind of a decision to be taken, and took us about a week to discuss. But I mean, obviously, there will be circumstances and external factors that will come and influence your decisions on your strategy and direction, and you have to evaluate different options and take your risk based on your own vision, right? So, so we decided to stay within the course of the consumer application. But I mean, their point was the market is getting saturated. You better empower the other brokers, wallets, exchanges to resell the yield rather than go directly to consumers. But I think the market is growing fast. There's a lot of appetite for people to earn reward or yield, and we're kind of still too early. I mean, we're still a very small business. We're 50 people strong. We have 5,000 customers right now, but I mean, we're still compared to a lot of other players. We're still like a baby business. So many things can change as we move on.
All right, I want to move it over to John. You work with and you evaluate, applications and from founders all the time. What are you seeing? What kind of advice are you giving to some of the projects that want to work with Shopify?
I think the first thing for a lot of projects that are coming on board is I'm finding a lot of blockchain companies or blockchain projects don't understand the customer relationship, because one of the things about launching a product is merchants are in fact the customer of the feature and the projects that you're launching, right? And there's a bit of a learning curve I find for a lot of companies to staff up or to just level up on their knowledge of how to work with a merchant who may have much different understanding of blockchain, and also may have a very different business model that they had intended.
Sure, it's like B to B to C.
Exactly. And so
Yeah.
it's a bit of a learning curve, but I find that a lot of the businesses that are very successful kind of take a lot of the learnings to heart and are able to really succeed. Like we've had one partner that came through that build a blockchain application on our platform, started off with a small launch, and now are in the process of dealing directly with some of the largest sports leagues in the world, right? And it's just amazing to see that growth happen. And I think it's like there's some discussions later about pivots, and I think it's just really interesting to see how, you know, you can have the greatest technology in the world and you can have some of the best feature set, but really like the concept of running the business in order to have customers who are willing to pay to get access to it is one of those things that actually does require a little bit more of a customer relationship management. And we've been finding that that's been a really successful approach to this.
Awesome. Okay. Just for the audience, I'm going to open it up to questions, of course, shortly, just to let you know, get your questions ready. And so on this topic of advice for founders and in growing and scaling your projects, I'm going to turn to Nathan.
Yeah.
What advice do you have?
The guys are completely right about the fact that you definitely need to find your market fit for the business component. That's completely true. So this is a task for every founding team to ensure and give a enormous amount of effort to the feasibility study once you're planning to go with your project live. But there are some key components in the business that we as blockchain business-to-business solutions provider and at our venture capital firm, we do consider to be key components as well. It's definitely token economics. This is something that needs to be done bulletproof. I've seen projects that were raising tremendous amount of money because of their market fit, but losing the trust because of their tokenomics was weak, was really weak. So it was not protected with help of vesting schedules, with help of staking functions, with help of yield farming, to lock up token amounts from circulation and to sustain trading process. Bulletproof smart contracts is another thing that I would definitely highlight. We have all seen all the things, all the hacks that have been happening. So every founder who wants to launch his token, go there and make the proper security audit. Even 2 security audits would be better, because this is something that you would launch into the market and it would be hard to change your smart contracts after the launch. They are on the blockchain. Definitely upgradable contracts, which have been recently introduced as a solution, is something that founders can take a look at and consider being used for their projects for sure. And I would definitely say that there are 2 components for every crypto company. There is this traditional part of the business if they are building something traditional, right? Or this access to their services, right? Something that would be utilized by different communities. But if you're launching the token, there is this token component, and you need to make sure that your token component is filled out with all the amount of trading functionalities, like as already mentioned, stakings, liquidity mining, yield farming, whatnot. Everything that is there for traders who are used to that, it should be there. Like if you can implement something like that for your project, do that, because it would benefit your project trading process, your token trading process. And you should understand that your token holders and traders are not for sure your future application users, right? So this can be completely two different communities. And thus, you also need to pay attention to two types of marketing. Marketing to your crypto traders, those who would trade your token, those who would make purchase deposits, use those DeFi functions, and those who would use your token to purchase your services as well. These should be separated in somewhat interlinked, but separated, of course. And of course, while raising, I will say it again, the initial phase while you are raising must be super strategic. A young founder of the company must let in only those venture capital firms, only those key opinion leaders who would be strategic, who would bring value to the project. And every project should use this super easy but hyper important functionality, vesting. Vesting schedules can be long, but this is something that would save and secure the project from dumping. You cannot release and unlock your tokens like 25 or 30% of what you gave to some particular venture capital firms in month one, because in most of the cases, people would see the first pump and they would dump. That's the reality. That's just the reality. Because every venture capital firm is created to make money. And if they see that they are in profit, they would start selling their token, which would cause, of course, the dump. If they cannot sell the token, they will not sell the token, as easy as that. That's why pay a lot of attention to tokenomics. It's super important part of the business, because once you're launching token, this needs to be bulletproof, and security audits as well.
Yeah, that is all really great advice. And I guess just further to that, I know a lot of founders, particularly, ones in Canada, are don't really know how to approach this. And I guess, should they approach this? I mean, what's your advice to founders looking at this kind of business model, I guess? And like, can anyone do it? Do you have to be wary of the jurisdiction that you're in? Or maybe you can talk a little bit about that. I mean, from a regulatory standpoint.
From the regulatory standpoint, there are quite a few ways how you can launch your company. Oftentimes, our partners, they use subsidiary organizations around the globe in, for instance, 3 economy zones, which is now available in Dubai, right? Estonia is pretty adoptive, and many other places in the world have also started to open their doors for crypto projects. It's kind of usual use case when the company has one or several subsidiary organizations to operate tokens. And one of must-haves for a crypto company who has their token in the market is definitely having the market maker.
Right.
The market maker organization who is helping you to productively trade your assets without you dumping your token, without controlling to the market. They help to strategize that. As well, they help you to bear with centralized crypto exchanges, where you can stumble into a lot of complications in process of trading. That's true, because that's centralized business, which can be regulated in different ways and which can have its own rules of play, right?
Okay.
So you have to be quite straightforward in a way how you operate. And every market maker has a broker-dealer license, right? So from the regulatory standpoint, from the legal standpoint, it's completely correct and wise to use an external organization who can help you with professional trading. So that's probably another advice when it comes to jurisdiction, is that get a few lawyers around the globe, from free economy zones, from countries that are adaptive to crypto. It can be Switzerland, it can be Estonia, it can be it can be BVI, Dubai. You can hire lawyers there and consult with them on how you can set it up. Get your licenses, of course, to exercise and execute the functionalities that you need to do. Get legal opinions, because it's important to have legal opinions from credible lawyers with regards to your token not being the security, because once your token becomes the security token, it becomes much harder to operate it and to do anything with it, right? And of course, use the market maker who has a broker dealer license and can help you to maintain the productive trading process for your token, and would help you to operate in the external market. It's too much for a single team, for a founder to stress himself with these kind of things. So there are already organizations out there who can help with that, and the business itself should take care of the main business use cases already mentioned by other speakers, right? Like customer services, because this part is as important as the part that I just mentioned, tokenomics and security stuff.
Right. Awesome. Very interesting. All right. Well, I think at this point we want to entertain questions. So we have a few in the chat. And also, if anyone would like a question, please feel free to unmute your microphone and ask it. And I'll just take a minute to see if anyone has any questions, and then I'll turn to the questions in the chat. So, okay, I'll turn to the questions in the chat. First of all, John Lee, can you speak to the DeFi applications beyond NFTs that Shopify is considering when integrating with Esther e-commerce platform? Not sure what that is.
So, I mean, decentralized finance does require a lot more investigation. We are definitely looking at it. We'd love to find out more about it, but realistically, it is a financial product, right? And Shopify is in the business of powering e-commerce, not in the business of providing financial products, right? So it would, if any work was happening in that space, it would likely be through partnerships, because that's not something that we would look at leveraging, as it doesn't necessarily provide, it doesn't make commerce better. It allows for the merchants to grow, and that's where we want to support them. I mean, we have a traditional financing system where we do offer quite a bit of capital called Shopify Capital that merchants have access to. I think it's just a question of finding the right partner to see what could be offered in a regulatory framework and go from there. I am more interested in the second question, though.
Yeah, sure. The second question, would Shopify consider integrating a blockchain application or feature created by a decentralized project like Aave, Uniswap, or OpenSea?
And the answer to that is absolutely yes. In fact, like the entire reason why I formed the team that I'm on right now is that we want to onboard as many projects as possible to give them access to the touch points of all of our merchants and the commerce that happens in Shopify. The entire platform has been built up to build through ecosystem and partnerships, right? And we are open to partner with anybody that has a decentralized project that has a defined feature or benefit to a merchant or a buyer, and see how we can integrate it into the platform. So we're
Awesome.
very much open to that. We're actually actively trying to find more partners. So always open for those conversations.
Awesome. Okay, we have another question here, which I think is for Nathan. Do you think that investors in a token would be interested in the project and HODL?
It depends on the investor. Like there are different strategies of investors, but as a project founder, you cannot control what's in some other's head, right? So you cannot rely on that for 100%. What you can rely in this case is a vesting schedule. So if you put releases of your tokens to some investor who participates in private round, this investor is getting your token at a very discounted price.
Yeah.
And this investor should get your tokens in portions. That's the must-have rule as for me. When I check the tokenomics for the project, I pay a lot of attention to vesting schedules. And I do recommend to vest tokens at least for 2 or 3 years. From 24 to 36 months is okay. So you vest the token, you apply vesting schedule, and the vesting should even start with some delay after your token is being listed to decentralized or centralized exchange, whatever. So this would guarantee that there will be a bit of the linear release of the token supply into the market, which would give you a tremendously bigger amount of control over the token trading and would help you to avoid a process of dumping your token and price volatility, which has been a huge issue for so many projects I worked with before.
Right. So just like the conventional world, you always want to have those long-term people, supporters that like your project and want to be with you for the long term. All right.
If you want people to hodl, make them hodl. Yep. that's the only rational way to make it work indeed.
Got it. All right. I'm opening it up to the audience again. Please feel free to unmute your mic and ask a question or put it in the chat channel. We have just a couple more minutes left.
Hi, I have a question in response to that. So thanks for that insight into hodling for a token. So my project is the military blockchain ecosystem. So I'm in the Canadian Armed Forces, been in for 26 years. And my vision is to create a blockchain where military members and their families can invest in to help fund the blockchain, as well as to assist soldiers who suffer from post-traumatic stress disorder. So that would be, it's I guess in their best interest to hodl in the project because they're investing to help as well as learning about the blockchain, because a lot of military people are hands-on and they're very handy, and they like building things like gaming machines, like their own gaming machines. So like we would have, sort of workshops for them to build their own mining rigs and stuff like that. So like I know a lot of people, like my comrades in the military, that they like doing that. They like building machines. And I think it's just a great thing to allow them to learn about crypto. And I myself, I just got into the crypto space in like August of 2021.
Right.
So anyways,
yeah,
I just was wondering, if you think that would, my idea would entice more people to stay in the project and invest and keep with the program and hodl with the coin and the blockchain.
Okay, I think that's a Nathan question.
Yeah, I think that these people are very rational, right? But again, they can get some advice from friends. They can see the market moves up and down. And we all know that to benefit from your investment, you need to hold it for at least a year or 2 years, 3 years. So just to make sure that by the end of the day, your investors would be happy, make the vesting schedule for those who invest early on with their cash, not with their mining machines. For miners, the rewards are, though, indeed linear. So they get their reward once they mine the block for the blockchain, right? So they accumulate some amount of crypto in the long run, and they they would not get an access to a lot of tokens at once. So that's okay to allow them to sell their tokens into the market once they mine out their crypto. But for those who invest with cash, those who invest in a bit more traditional way, I would say that vesting schedules are still must have to be applied. It's pretty easy smart contracts function. It's a small additional set of smart contracts for around 300 to 400 lines of code, which is not too expensive to be written and not too expensive to be audited by a really good firm. And every project should take a look at that and use this functionality for the long-term benefit of themselves and their investors as well. This is win-win situation. Even if your investors like to sell at some point of time, they would not be able, but then they would revert to the token in 2 years, in 3 years. And as you're planning something which is really good for society, I really admire your intention and your business idea, which has its target audience, which has its value add for those people who really need some support, having some PTSD and whatnot. You know, it's really important to support people in their life after everything that they go through. And I do think that they are the people who can really understand why it's required. But again, they might get some financial advice from their friends, and that can incentivize them just to go and sell. So we need to definitely ensure that they will not do that, because in the long run, you plan something really big and cool, right?
Thanks for your feedback. I really appreciate it.
Yeah, thank you. And I think we're almost out of time.
Can I ask a question?
Yeah, Jerry, can we take another question?
Yeah, a few more minutes.
Sure.
Okay, thank you. So first, thank you, of course. We want to take our product that we did for the next level. And as you guys mentioned, to do so, we need to have someone that is a lead in the field, and to take maybe a good audit, which is a company or a guy, I don't know, but I wonder what steps do we need to take now to take someone that we know that this is a good step to continue in this world.
Okay, any of the speakers want to?
So the question is, I mean, how you find the lead investor, or how you find the way to the investors? I mean, what was the question again?
So how we continue to so we did something that now he's like working, and now we want to take it to the next step. What is the step that we need to take to show that we have something stable in our hand?
Did you do your are you guys doing a token raise, or you raising through equity? And do you have are you self-funding it right now, or did you get any external capital?
As you mentioned before, we should have someone to audit what we have, and we need to have someone that is a lead technology in their field. So everyone can say they are really good in it. How do I know that we are partnership with someone that you really respect in the market?
Yeah, almost like you need an accelerator. Maybe Nathan, do you have any insights?
Yeah, definitely. When it comes to selecting a proper acceleration organization, because that's probably what you're looking for right now. You're looking for a company who can accelerate you. You're a walk and you want to run, right? So you need to accelerate. And practically, you need to check out the past experience of the organization, of course, their portfolio, who they worked with, and what was the outcome of their collaboration with previous projects. That's an important step. Another thing is how the organization is treating the process, right? Because here at Applicature and Mempool Ventures, what we do, first of all, is the initial step that we take with every team we partner up with. It's called due diligence and project planning process. So this is the moment where we as a team get onto a serious discussion with the project, receive all the information about previous achievements of the project, technology overview, business overview, team overview, marketing overview, and whatnot. And we analyze it in depth and check out what is missing at the moment to make the next move. We compare this existing set of the achievements of the artifacts, let's call it this way, with what are the goals of the company, what the company wants to really achieve in a year from now, in 2 years from now, in 5 years from now. And based on the goals that are being set in front of the company and the current status that the company has that we would understand based on our due diligence, we would recommend the company to make some particular next steps. Would it be hiring some advisors? And I'm oftentimes being the advisor for projects I'm working with. Would it be moving ahead with more marketing, with onboarding key opinion leaders? Because in crypto space, you have multiple opinion leaders, and to grow your community with potential token holders, with potential traders, you definitely need to show your project through these opinion leaders to a broader community. Of course, the security audit is definitely something that also may be in the scope of next activity. So the security audit for any blockchain and smart contract technology that you're planning to launch can be advised in the but only after the process of initial due diligence, of course, with an acceleration organization. Acceleration organization may advise you to do so or hold from this particular activity until you build something bigger or until you go public, right? Because you need an audit and stuff before you go public, that's for sure. Also, you can get an advice to get on board the market maker that I already mentioned, because you plan to have a token being released. So in line with an audit, you would need to onboard the market making organization and so far and so forth. So there might be some extra moves, some extra steps. And before going public, I would definitely recommend each and every project to ensure that there is a feasibility study, that you have an MVP at least. Because without an MVP, we are not in times of an ICO boom, right? It's practically impossible to gauge interest and ensure the project sustainability in front of investors' eyes with help of just plain white paper. You need to show results. You need to show an MVP and what you did, and that you did the homework.
Thank you very much.
You're welcome.